Hey, what's up YouTube? Houston here. And for those of you just finding my YouTube channel, welcome. Please remember to hit that subscribe button and that bell. And for those of you that's been following me and supporting me, salute. And for my favorite patrons, always double salute. Now, today's video, we're actually going to be talking about how to start a business in Texas with bad credit. Okay? Because a lot of people that are in Texas, or you may be thinking about moving to Texas, thinking about starting a business and everything, but you have bad credit. So I'm just going to give you some breakdowns of why you still should start that business in Texas. Now, first thing, why start a business in Texas? One, Texas, they don't have no corporate or personal income taxes. So that's the reason a lot of business like Tesla has moved over there and everything, because like in the state of California, they tax you a lot, right? So companies are like, okay, well, we'll move our company to Texas, right? So no corporate and personal income taxes. Another good thing is for veterans. So if you are a disabled vet, 100% disabled vet, then they have a program for tax exempt on sales tax, right? So for your business. Now, another thing for veterans, if you're a veteran, you actually don't pay state registration fees as well. So to get your business started up, they don't actually charge you for that. That being said, let's move forward. Now, in this video, we're actually going to be talking about what state actually is the best state to set up your business. Then we're going to talk about the best lendable NAICS code. We're going to talk about what banks you should open up your business with, which net 30s benefit you the most when trying to build your business credit, the easiest credit cards you should start out with, and what's the best lenders you should go if you actually need a business loan. Now, here's the thing about it. I always tell people, do not start or create a business in these states: Nevada, Wyoming, Delaware, and South Dakota. And the reason that I tell people this is because if you're not actually residing in one of those states, say that you're in Texas, but you decide, oh, I want to have my corporation set up in one of these states or whatever, because you're not actually doing business for at least 6 months in that state, then you don't have any legal protection, okay, for your business. So if there's a liability that's created, then your state could actually supersede the state that you're incorporated in. Also, the reason I tell people don't set up a corporation or a LLC or S Corp or DBA in these here states is because, again, if you're not residing there and you're in the state of Texas, well, when Texas are wanting to give grant money and stuff to support a small business, because you are registered in another state, the parent company in another state, you may be disqualified from that grant money. Okay. Also, in terms of registration fees, your registered agent, you're going to have to hire a registered agent, also filing taxes. Okay. So you'll be filing taxes in both states. Also, it can create a roadblock for you actually getting funding from traditional lenders as well. So that's the reason I tell people, you should always set up your business in the state that you reside in. If you have any questions about why you should do it to be, or to go more in depth about it, about understanding how to build up business credit and personal credit, go to HoustonMcMiller.net or 3-Way Funding and schedule a consultation. Okay? Now, here's the thing I'm going to tell you guys, because a lot of people get stuck on this. They want to get funding and then they say, well, what if I buy a chef corporation? Again, here's the thing about it. Whether that chef corporation is in your state of Texas or if it's in another state. Here's the thing about it. If that chef corporation, the person hasn't filed taxes on that chef corporation, then the situation ends up that financial institutions, they're not going to give you any funding. Another thing about buying a chef corporation, are there active business bank accounts? Most of the time, people selling Chef Corporation, they don't keep up with the taxes. They don't file a business bank account. Now, there are some companies that say, "Oh, we have that stuff," and they may generate it. But the thing about it, you have to be very careful because you're playing with fire. Because if they're going to create something that has never existed, then not only are you piercing the veil, but you're potentially putting yourself in harm's way of any other legal action. So that's the reason that you don't want to play around with chef corporations unless you actually know that they did file the taxes and they do have active bank accounts. Other than that, just start a new corporation, especially if you have established credit, at least a 680 or higher. Then in terms of funding, it should not be as challenging. And again, if you need questions answered about business credit funding, go to HoustonMcMiller.net, a three-way funding. Now, here's another thing about Chef Corporation that you need to understand, guys. It's about phantom debt. Okay, so say that you bought a Chef Corporation from somebody and they got American Express, Visa, all these here cards and stuff, right? These corporate cards, and they used them and they never paid them back, right? However, when you actually take over that Chef Corporation, you can actually activate that debt. And because you're the owner of that Chef Corporation, you're the one that's liable for that debt, okay? And then they can legally hold you financially responsible for it, okay? Even though you did not use those credit cards. Well, you own that corporation. Those credit cards are attached to that corporation. So by you claiming ownership of it, you take on that debt. So you have to be careful when dealing with chef corporations, guys. Now, choosing a lendable NAICS code. This is so important, and a lot of people are making this mistake. All right. So you in the state of Texas, and you a person that says, well, I want to do real estate investing. Well, real estate investing is high risk, right? So you don't want to do real estate investing. You want to probably do property management or something like that, a service type of business, or say that you want to start a restaurant. Well, you don't want to classify your business as a restaurant. You want to classify your business as a food distribution type of company. All right. So that's the thing about it, because you want to minimize the risk, even in terms of like ride sharing, right? So say that you want to say, I want to start a car rental business. Car rental business is a high risk business. However, you structuring your business as a ride sharing company or as a carrier or delivery service. I would probably be more cautious than to do carrier service or delivery service, not transportation. Transportation is a high risk NAICS code as well. Okay, so for those of you guys that are in the trucking industry, again, if you have questions about it and need help structuring your business, right, I would not set it up as a transportation business. All right, so go to HoustonMcMiller.net, reach out to us, and let's schedule a consultation on that. Now, let's talk about banks that build business credit. A lot of people for many years have been under the impression that they have to have a whole lot of net 30s, they have to have an 80 paydex score, all of this stuff to build up business credit to get qualified for funding. However, that's not true. Okay, especially now because of all these fintech companies and stuff. And I'll tell you a secret. 95% of financial institutions, they're not worried about your paydex score. They're not worried about if you have a DUNS number. They're worried about, are you either generating a revenue in the business, or if you have established credit at least a 680 or higher. That's what they're worried about. In terms of if you have a DUNS number or a good paydex score or whatever, that's not their main focal point, okay? Now, I'm not saying that Dun & Bradstreet is not important. I'm just stating the facts that most financial institutions, if you're generating revenue in the business and you have established credit, then it's much easier for you to get access to business credit funding. All right. And another thing I want to tell you guys about this is do not run to the banks trying to get a business loan. It's too much red tape for them. And adding to that, adding to the red tape of things, then you're going to have to concoct all this extra paperwork. They want 2 years in business, 18 months to 2 years in business, all of that stuff, especially if you're starting out as a new business in Texas. You don't want to have to do that. All you want to do is properly establish setting up the business. If you have established personal credit, then you want to go out the business credit cards, okay? And we're going to talk more about that, but just so that you understand, all right? Now, let's talk about net 30s, because this is really big, because a lot of people figure that, oh, I got to have all these net 30s. That's a tier-based system. And to be truth of the matter is, a lot of, again, like I said, with the banks, they want to know what's going on. Are you generating revenue, or if you have established credit? All right. Now, could net 30s help build the foundation for as you get in business funding? Yes, and I'm going to tell you why. Like these net 30s that we're looking at here, like with Shirtsy, Equifax, who they report to, right? So because these accounts are reporting to different business credit bureaus and stuff, then, and along with you, and I forgot to tell you guys, along with you opening up the right business bank account with one of those financial institutions I showed you, and making weekly deposit, that builds up your business credit much faster. You don't need a whole lot of net 30 accounts, okay? So you have a Shirtsy that reports to Equifax, Credit Safe, Small Business, Financial Exchange, and Sonia, National Association of Credit Management. Then you have a SUMA office that reports to Experian, Equifax. Then you have Quill that reports to Experian and Dun & Bradstreet. Now, some of you at this point, you're wondering why Granger, Seaton, and Uline are not on here. Well, because they don't have a component that if you need to bootstrap your business, then you can't get no money out of it, right? However, Quill is one of those companies that you are put in a position to where if you need to get access to funding to bootstrap your business, it is possible, okay? Now, that being said, let me tell you all one more thing about net 30s before I talk about these other two. With net 30s, a lot of companies, they're no longer doing the one and done. Okay, you have to purchase from them multiple times before they will report. Okay, so that's the reason I tell you guys, you have to be very careful in terms of the companies you're doing business with, and understand some of them may be charging a fee, an annual fee. Excuse me. Some of them may be charging an annual fee. Okay, and so with them charging a annual fee. To be in their part of their program for them to report, hey, it is what it is. But just keep in mind, you're investing in your business. Not that you're just spending money. You're actually investing in your business. All right. So just keep that in mind. Now, wise business plan. That does not mean you need to have a business plan. So don't think in those terms that you have to actually have a business plan. They do have other business credit products that you can actually purchase, and they report to Equifax, Experian, and Dun & Bradstreet. Now, with NAV, they report to Experian, Equifax, and Dun & Bradstreet, but you have to get the Business Credit Boost or the Business Loan Builder, and I'll put a couple links below in the video so that you can actually check them out. All right. Now, your first credit card. Let's talk about your first credit card. I would say if you at least have a 580, I would try to get the Capital One Spark Classic Business Credit Card. And the reason is, even though they may give you a low limit, about 300, 500, they still report to the business credit bureaus, and that's what you want. You want to show activity to the business credit bureau so you can actually get more money. So starting with the Capital One Spark Classic Business Credit Card is a good one. Wells Fargo secured business credit card. Again, they report to Small Business Financial Exchange, and then the information is distributed across. Now, you do have to put money up from $500 up to $25,000, but at the same time, you want them to actually be able to report that business data. Now, DIVVY, they are a fintech company, okay? And so they report to Small Business Financial Exchange in Dun and Bradstreet, all right? Now, for some people, they may get a instant line of credit. For some people, they will say, well, you don't qualify for our instant line of credit, but we have a credit builder program, okay? I would tell you, if you don't qualify for their line of credit, still join their credit builder program. And the reason is so that you'll be able to get that data reporting, so that it would help you build up your business credit file so that you can get access to more funding. Now, if you just starting your business in Texas, okay, and you just need a loan and you have at least a 720 credit score, Brass Financial may be a company that you can reach out to, because their loans start from $10,000 up to $500,000, no hard pull on a personal credit. So I would reach out to them. Another one is Seek Business Capital. Again, having at least a 680 or higher credit score, their loans go from $10,000 up to $150,000, no time in business, no revenue. So if some of you guys have worked with some of these companies, put a comment below and let me know. Let me know if I'm explaining this to where you're comfortable enough to move forward on this. Now, ACCION. Now, ACCION is a non-profit organization. So if you have established credit and a business plan, that's going back to Wise Business Plan, because Wise Business Plan will actually create the detailed business plan and report it to Dun and Bradstreet. So I think it'll be worth the investment. But if you have established credit. Now, if you don't have established credit, but you have cash flow and stuff like that, ACCION will also be able to help you in your business in the state of Texas as well. Now, for those of you that may have other questions about business credit, setting up your business, setting up your company properly so that you can get qualified for business funding, click the link, check out three-way funding, or click the link in the description, schedule a one-on-one consultation. Thank you.